Well, good morning, folks, and welcome to today's video. First of all, I want to thank you all very much for new subscribers and followers of our YouTube community here. I really appreciate it, and thank you for all the encouraging comments. Today, we're going to have a look at a variety of things. There's been quite a lot happening in the market, and we're going to look at currencies, we're going to look at metals, we're going to look at the stock markets, we're going to look at Bitcoin a little bit, and we're also going to look at some of the commodities, especially natural gas. So let's get started. First of all, we've got the currency charts up on here. You can see I've got a number of tabs up on my TradingView application, and I did a little short video on diversification. And it's important to know that I trade a variety of instruments across currencies and commodities and stocks. So I'm going to have a look at that little short video. It'll just give you an idea of how I approach the market in order to diversify and minimize risk. Let's have a look at currencies to start with, and we'll look at the dollar index, which not only affects currencies, but it affects the other markets as well. You can see the dollar index, as I thought, might struggle to get up into this area here. This is still our target zone. And we had a big rally, and then the last 3 days have begun to move down. So the latter part of the week, we've begun to move down. However, the key support level is still beneath us, and that's where this 20-period moving average is, and also this red line, which is the support area going back some time. And if you remember, I said 104.30, thereabouts, 30 or 35 is the important number that we want to hold above, and we're still above there, so there's no cause for concern. We did see big moves in the market yesterday, with not only the stock markets moving down, but the dollar index moving down and bond yields moving down. So a bit of a mixed bag, really. We saw crypto dropping below 20,000, and we saw S&P, NASDAQ dropping through support at the same time as the dollar index moving a little lower, not a lot, not compared to the stocks and crypto and so on, but bonds also moving down. So all kind of mixed up, and it's a bit of a concern for people in the market who are long on stocks and perhaps long on the US dollar. However, as long as we're holding above this support level at 104.30, we're still in the long direction for the US dollar, and we want to move up into some of these areas here. You can have a look at previous videos on my targets, but they're roughly around 106 and then 107.50, and that is the 200-day moving average and the first Fibonacci, 38% Fibonacci, 38.2, and then we've got the 50% retracement at 107.50. I think we still have a chance of getting up there before the dollar attempts to make a top and then begins to move back, perhaps down towards the lows again at around about 100. So let's have a look at the euro and the pound in comparison to what we see on the dollar index. We can see the euro is, well, my target for the euro is down here at 103, and that would fall in line with my target for 107.50 on the dollar index. However, we are finding some support above the 100-day moving average and slightly above this first support level at the 38% fib and this recent low. So we haven't actually reached down there yet, although we've got quite close. So the 100-day moving average actually is acting as the support level primarily. We've got the jobs numbers coming out at 8:30 a.m. Eastern time, and that's going to have a big impact on the market, considering Jerome Powell's testimony the other day, where he was rather hawkish about interest rates and the overall approach to combating inflation. He has implied that we may see further increases in interest rate further, faster and longer, which implies that the dollar is likely to gain more strength over the next period, which should see the euro falling down into this 103 area before we start looking for a bottom. So our strategy is to be short the euro, and the same goes for the pound. The pound actually has just moved up to its resistance level, and I'm quite happy with looking to sell the pound at this level right now, just below 1.2 on the chart, below this downward descending trend line. We broke through this support crucially. We've dropped down. We actually moved down below this support here as well. We've broken down through all the moving averages, including the 200-day moving average. We held below it for a day or two, and we've just moved slightly above it. But the hope is for the pound to move down into some of these support levels at 1.1650 and then maybe down to 1.14 before finding some support for a move back up again. So the overall strategy for currencies is long dollar up into the 107.50 level on dollar index, and then short dollar later on in the year, once we see the rate of interest rate hikes begin to reduce, potentially as the year progresses. So that's the strategy on currencies. Unfortunately, the Canadian dollar, we were short Euro CAD and we were short US dollar CAD, and Canada decided not to hike its interest rates, which then put pressure on the Canadian dollar, and we saw it weaken against the euro, against the pound, not so much against the Australian dollar, and against the US dollar. So we've seen some strength in CAD. But if you look at the interest rates in Canada versus the other countries, you'll see that Canada's at 4.5%. United Kingdom at 4%. The Euro area is only at 3%, and the US is at 4.75%, potentially going higher at the next meeting. So Canada's interest rate's pretty high compared to the other countries, slightly below that of the US, but still higher than that of Europe and the United Kingdom. So there's still potential for the Canadian dollar to rally going forward based on interest rates alone. And if you look at the inflation rate for Canada, it's 5.9% compared to 6.4%, pretty similar to the US. And if you compare that to the UK, for example, that's way up at 10%, 10.1%, and the Euro area at 8.5%. So the Eurozone and the United Kingdom still have some work ahead of them to get inflation down, as does the US. The US target is 2%. So it's going to be very interesting to see how interest rate differentials ebb and flow as time goes on. And right now, it's likely that the US is going to be more aggressive in interest rate hikes than, for example, the Eurozone and the United Kingdom, despite the fact that the Eurozone and the UK have higher inflation rates. So it's all going to be very interesting. Let's switch across to the yen pairs, and you can see the ones that we're looking at or are interested in are the dollar yen, the euro yen, and the Australian dollar yen. And I've just now added Canadian dollar yen into my basket of interest, considering the decision that the Canadian Central Bank made not to increase interest rates. So we're going to have all of these on our radar. At the moment, we're short Australian dollar yen. There's a lot of information on that in previous videos, and I'm actually short on US dollar yen as well. It's a hedged position. It's a complicated position. It's very difficult for me to put this into the trading signals because it's a kind of in and out situation, adding and removing hedges constantly as the price moves up and down. But overall, whilst we're beneath 138.90 or 140, this area up the top here, I expect that we'll see some more downward movement on the dollar yen, and we should get back down towards this trend line at around 125. The median price once again for dollar yen is around 120 to 125, and we'd expect to move back down into that zone at some stage in the future. The Bank of Japan kept its interest rates the same at minus 0.1, so there was no change there, and their inflation rate marginally decreased. So we haven't seen a lot of change in there, and this remains a very overbought currency pair. We expect this to move down at some stage. Where that's going to start moving, I don't know. Could be here. I've got a short position which is hedged, but I'm willing to look to sell more of this currency up into these higher levels. We'll have to wait and see. And it's a matter of adding and removing short and long sides of the hedge, constantly adjusting as the price moves. But one that's much more simple is the Australian dollar yen. We're short this. We've been short this for some time. In fact, weeks, if not months now, and we're short. We've just taken a good profit on this one, shorting up here somewhere, and we resold on a bounce last night prior to the Bank of Japan's decision. We're looking for a continuation of this move down towards the top of this downward trend line, having broken down beneath all the moving averages and failing to hold the channel bottom and not reaching up even to the 200-day moving average or these higher Fibonacci levels. So we're short on that one, and so far so good. And we've managed to take lots and lots of profit on this currency over the last number of weeks and months. Then we got Euro Yen. The same applies to Euro Yen. I'm not too sure if this is time to short just yet, but Euro Yen is right at the top of its range at the moment. It's looking like it needs to come down for sure. The average range, once again, for this one is in the 120 to 125 range, and we're way up in the 140, 145 range at the moment. So at some stage, this has got to come down, as do all the yen crosses and yen pairs and the yen against the US dollar. So we're looking to potentially sell this one. We might get another pop up to 146 perhaps, maybe 148 even. I doubt that we'll retest the top though. So somewhere around about here, perhaps a little higher, would be a good place to sell this. And again, if you look at this, it's a sort of a head and shoulders pattern. It's very messy, but you can see the left-hand shoulder over here. It's a head, very low hanging head, I suppose, and then the right hand shoulder potentially forming here, kind of just at the level of the left hand shoulder, just slightly higher. So it's looking good for an area to sell in. We haven't seen any reversal signals just yet, but we'll be keeping a very close eye on that one. And then the Canadian dollar yen, if we get another little pop, considering that the Canadian dollar is likely to move down versus most currencies because of the interest rate decisions, we could see this one moving down. If we can get a little pop back up towards this 20-day moving average on Canadian dollar yen, I'll be looking to sell that. And that's all I want to say for currencies right now. Then the other thing I want to look at is gold. Well, we're short on gold. I really don't know. And again, a lot of this is going to depend on what happens with the US dollar and the non-farm payrolls number that comes out a little bit later on today, and the unemployment number. But whilst we're below this high here at 1856.57, I expect that gold will move down further and that we're going to retest the 1800 level and then get down into the 1780, 1750 sorts of levels a little bit later on, down towards where this 200-day moving average is. Same goes for silver, which is looking decidedly weaker than gold. So I'm not going to talk about silver. Let's focus on gold. It's a lot more structural, and it's easier to see where the levels are. Silver's already hit my target, so I don't think we'll be trading that short at this stage. But gold is one to keep an eye on, and we're short gold at the moment. But it's looking a little perilous, I have to say. When it comes to stocks, I expected that we might move down. I didn't expect it was going to be as dramatic as yesterday and today. I have a feeling, however, that this might be a bear trap. This is very concerning, considering that the dollar has begun to drop off. We've seen weakness in the dollar index, and we've seen the stock market and bond yields all move down simultaneously, which is quite unusual. One of them's got to give way, whether it's going to be the dollar strengthening again and the stock market's continuing lower, or vice versa, the dollar continuing to weaken, then we should expect to see the stock markets begin to rally. And this could well be a sucker's move down. Let's just have a look at the S&P as a good example. Breaking through the bottom of this channel line, everyone's gone incredibly bearish all of a sudden after being quite bullish after those couple of days of good moves up earlier on. But if we get rid of this channel, I'm actually going to leave that in, but if we ignore the channel and put in a horizontal line instead, let's put a big red horizontal support line in where we've just reached. You can see it was previous support over there, and if I just scoot back on the charts, suddenly you can see it doesn't look so bearish after all. Now, we've broken down through the channel line. You know that I prefer horizontal lines much more than I do trend lines, and we've just moved down to a pretty interesting and key support level. The break below the channel could be a bear trap. Be very, very careful of this. I expect that we might see a decent bounce from here. We're down at 3,900. If you look at that line, it's a pretty decent support area, and one would expect in a bull market, and when I say bull market, I mean a bear market rally, really, we would expect this level where we are right now to act as a really good support level. It forms a beautiful bottoming pattern, head and shoulder-esque, but not quite, more of a crowning bottom, although it would be an upside down crown, which would be weird, but you get what I mean. And this could act as support. The first target then would be the underside of this channel trend line, which would be normal for a breakout and a retest. But I expect that if we get there, we are in danger, in peril of this moving back up inside the channel and this turning out to be a false break. My play for the day on S&P, buy dips, but we've got the NFP coming up, so be careful of that. I think if we get the NFP number, we get a nice big dip down on S&P and on NASDAQ right down as far as we can get. That would be a good place to start to buy those for at least a scalp or a day trade higher, but then a move back up to the underside of the channel, and potentially a break through the top and a move back. Now, remember that the stock markets and the dollar index and bonds are all out of coordination right now. So I don't think it's worthwhile looking at the relationship between the three of them to decide which way to trade this. That's what I think is going to happen on S&P today. A dip down with a non-farm payrolls report, perhaps even down as low as this support here. There's another key support right here, and it's possible, unlikely, but it's possible that we'll get down to 3,800 on S&P before a bounce back up again to test the underside of that trend line. I'm not sure if we'll get much below where we are at the moment. I think we might see a spike low, false break through the support, and then a move back up to the underside. I think that's the play of the day for NFP. If that works out, that would be great. I'm not saying that's going to happen. And then I think the same thing happens in NASDAQ. Really not looking nearly as bearish as the S&P if you consider the channel line. Remember, those horizontal lines on S&P much more important than the channel line. But here we are on NASDAQ. We've got a little bit of support down here at 11,800. Perhaps with the NFP and unemployment numbers, we'll get a dip down to 11,800 and then a rally back up to the end to this next support at 12,000. 12,000 is the key number. Once again, everyone's bearish because we've broken and closed beneath 12,000, but that's not the real number to be worried about. If I remove that line from 12,000, you'll see that the real line of support lies just below us at 11,800, and it has done for months and months and months now. In fact, most of the last 12 months, we've been stuck in this range. This hasn't been a traditional bear market. We're just consolidating sideways since May 2022 up until now. All we've done is move sideways across the page. So this is not a bull market or a bear market. It's kind of a sideways market, and we'll have to see what happens. Everyone's expecting markets to move lower. I think too many people are expecting the markets to move lower. Look for a bounce and a move back up on NASDAQ too. Right, so having said all of that, let's have a look at Bitcoin. Bitcoin has broken down through the 20,000 level. That was my target all along. We've reached the 200-day moving average on Bitcoin. So it's not time to be going short on Bitcoin right now. This is a really key level. And if I draw another line below that at 18,200, it's another super key level. So you can see this is a day chart going back to these sorts of periods, June 2022. Again, we've just been moving sideways across the chart for the best part of a year, 12 months, 11 months, maybe 10 months. And we've now dipped down to the support where the 200-day moving average and the 100-day moving average kind of coincide. Where do we go with Bitcoin? I wouldn't be surprised if we do get a rally. Depends on the job numbers. I'm not sure if the job numbers are going to come out stronger or if they're going to come out worse. We really don't know. I expect the number will be higher than the forecast of 200,000, but it's not going to be 500,000. It might be 250 or 275, something like that, in which case the market won't know quite how to react. I think that will see a dip in stock markets and then a rally, and I think the same thing could happen on Bitcoin. So look for a dip below the 200 period moving average on Bitcoin, perhaps down to 19,000, somewhere around there, perhaps down to 19,200, in line with what happens in the stock markets, and then a rally on Bitcoin back up to perhaps 21 and at least up to 20 and a half. I'm not going to be trading this one, but that's just for interest for those who are trading Bitcoin. Brent crude oil. Well, we're going to get to natural gas any moment now. Brent crude oil broken through the bottom of this channel line. However, once again, if I put a horizontal line in there, you can see that Brent crude is just resting on support. And if you're going to trust anything on your charts, if you had to get rid of some of the tools that you use on your charts and you had to choose between horizontal lines and trend lines, get rid of the trend lines. The horizontal lines are the most important. The key lines of support and resistance are the most important tools that you have in your tool bag, and always remember that. So a break beneath a channel bottom like we saw on S&P, now we've seen on Brent crude, does not mean that we are now moving lower. It's an indication of weakness for sure, but it's not an indication that this instrument has given up the ghost and is likely to collapse. So we'll have to wait and see what happens at the $80 level, which is kind of where we are right now, and to see if we find support there. I don't know. Again, I'm not trading this. It's a very complex situation right now with energy and energy prices and supplies and wars and all sorts of geopolitical shenanigans going on. So I don't know. I'm staying well away from that. Before we get to natural gas, the last thing I want to look at is soya, because we're short soya. We've been selling into rallies for quite a long time now. Every time we've rallied up, we've been selling, and we've taken profit on the dips. The same thing happened a few days ago. We rallied up to the underside of this trend line, which is now broken. In this case, it's a pretty good trend line, and it's worth paying attention to. And we sold at the top here as it touched that trend line, and it's now beginning to move lower. I'm short on soya for a move down into the 1,400, 1,400 level, thereabouts. So that's for those of you who are following on soya. And then the last one we want to look at with a little bit more detail is natural gas. Now, nothing's really changed. I'm tempted to send out new updates on natural gas, and I have been for a couple of days, but actually nothing has changed. We're still holding above this $2.50 level, although just barely, just fractionally. We are below this support, and we haven't managed to break up above $2.61 or 63 since we broke down below it. We've managed to try and touch through it. We've just spiked a little bit through it yesterday, just a tiny bit, but we fell back down. And today, but we still got support here, and we're still holding above roughly $2.50. You know my position on this. I'm long on natural gas, but I'm hedged short. About 30% short, 70% long. I was going to add more to the short side of the hedge on a daily close beneath this low here. I could move the support line down just a fraction, which would take it to $2.60, which then cuts off the wick tops of these candles and just rests on the bodies of these candles. And then it cuts off the wick bottoms of these candles and the wick top of this one and just rests on there. So that's a pretty precise number. So that's at $2.59. I was going to add to my short side of the hedge on a daily close beneath that level, but we found some support at around $2.50 and it's still holding support. So I have not added to my short portion of the hedge just yet. I'll be waiting to see what happens today. It's Friday, waiting to see what happens with today's close before the weekend, before deciding what to do. If we don't manage to close up above $2.59, I shall add to the short side of my hedge, probably another 10 or 15%, in which case I'll be weighted something like 60% long, 40% short, and I'll be looking to cover some of those short parts of the hedge down here at $2.35 or 34, and potentially, depending on what happens when we get there, potentially cover those shorts and add some more to the long side of this hedge and hope for a bounce above here. If we fail to hold that level, and again, it's going to depend on price action when we get there, I won't be adding to the long side. I'll be holding on to the short side of that hedge and potentially adding more to the short side and weighting it more heavily to the short side, potentially actually up to about 50-50. So then I'll be equally hedged, balanced for a move down then to around about $2. And there is potential for us to move below $2. I don't think that's going to happen. July futures are priced at about $3.10, which is hopeful for the long side, which means that we probably will get above the $3 level before July. That's a long time to go before July. Doesn't mean that it's going to take that long, of course. It's the futures price. But that's the scenario we're in betwixt and between right now. You've got my hedging strategy. So basically 70-30. I might add some more to bring it to 60-40, and we'll see what happens when we get at $2.35. But if we see some bounce off here, I'll cover some of the shorts, potentially add some longs, and hope for a move back up to about $3, and then eventually into the $3.30 to $3.70 range, which is the overall target range where there'll be a lot of interest in covering long positions and potentially adding short positions. So this is the key zone that we need to be looking forward to and deciding what to do when we get there. At that stage, I'll probably be out of natural gas for a while, but we'll see what happens. So that's the overall strategy in a nutshell. I'm hedged with an emphasis on the long side. I'm willing to add some more to the short side if we move lower. So that's natural gas. Complex situation, fluid. Remember, once again, we're right in the middle of a normalized range for natural gas. As you can see from this sort of distant view, there's the top, there's the bottom. We're slap bang in the middle. We're holding just below intermediate short-term support, but we're holding just above intermediate short-term support as well. We're right in the middle between the two of those. So we're in the middle of the middle part of the middle, so to speak. So that's natural gas. I hope that's been helpful. If you found this content useful, I'd really appreciate it if you like the video and subscribe to the channel. As always, it really helps the channel, and I really appreciate the support that everyone has given me so far.